Have you ever felt like prices keep going up, but job opportunities don't really improve, and the economy feels stuck? That's what we call stagflation. But here's the big question. Is the United States, the largest economy in the world, really heading into a new era of stagflation? Or is this just a false alarm? Let's break it down together. Let's keep it simple. Stagflation is a mix of the problems that usually don't go hand in hand. A slowing economy, also called stagnation, rising prices, or inflation normally. Inflation goes up when the economy is booming, but in stagflation, it's the worst of both worlds. The economy weakens, and employment rises, yet prices still soar. History gives us a warning. Back in the 1970s, stagflation hit hard. Inflation was in the double digits. Unemployment was high, and growth was nearly zero. It took years for the world to recover. Now, imagine this. Your paycheck barely covers groceries, and every month feels like a losing battle. Not a great picture, right? Fast forward to 2025. How's the US doing? Economic growth. In the first quarter, the US economy actually shrank by 0.5%. In the second quarter, it rebounded to about 3%. Roller coaster numbers, but for the whole year, forecasts point to just 1% growth. That's slow. Inflation. July 2025 inflation was 2.7%, slightly above the Fed's 2% target. Core inflation is closer to 3%, not crazy high like in the 70s, but still enough to make people nervous. Unemployment. Here's the kicker. Unemployment is now around 4.1% to 4.2%. That's over 7 million Americans out of work. So, think about it. Rising living costs, but fewer stable jobs. That's why many analysts are starting to whisper, are we moving closer to stagflation? So, is this stagflation already happening? The short answer, not yet. Why? Because inflation is still under 3%, not double digits like before. And the economy is still managing some positive growth. But here's the problem. Warning signs are building. Weaker consumer spending, new import tariffs, global conflicts, and high interest rates making loans and mortgages more painful. If this trend continues, those conditions can merge into stagflation. What would hit you the hardest first? Rising grocery bills, or the fear of losing your job? So, what's the Federal Reserve doing about this? They're stuck in a tricky spot. Lowering interest rates too fast might bring inflation roaring back. Keeping rates high could choke the economy further. It's like driving a car, step on the gas, the engine overheats, hit the brakes, the car stops. The Fed is trying to keep the car moving without crashing. Not an easy job. If stagflation really takes hold in America, the rest of the world will feel it. The dollar could swing wildly, affecting exchange rates everywhere. Global energy prices could spike. Stock markets could get shaky. For investors, it's a tough call. Stocks are risky. Bonds might look safer. But high rates and recession fears can still hit hard. That's why experts keep stressing diversification, emergency savings, and spreading investments across different assets. Let's say you had $10,000 to invest right now. Where would you put it? Stocks, gold, bonds, or even crypto? So, is the US officially in stagflation? The answer is not yet, but the warning lights are flashing. History shows us that once stagflation sets in, it's very hard to escape. That's why keeping an eye on inflation, jobs, and growth is so important, not just for Americans, but for the global economy too. Now, here's my question to you. Do you think stagflation is coming, or can the US still avoid it? Drop your thoughts in the comments, and don't forget to subscribe for more insights on money, markets, and the global economy.